Welcome to the Pulse Check podcast. Kelvin Tan here in Singapore. Great to have you on board.
Thank you. Happy to be here.
Yeah, you know, I mentioned it to you. I typically start with a quick icebreaker. Kelvin, what makes you you? What really describes you as a person?
Well, I'm a bit of a renegade, right? A bit of a rebel. The easiest way to get me to do something is to tell me it cannot be done or it's very difficult to do and most people wouldn't bother. That's actually the reason how this entire thing came to being, right? The setup of a Nexus business within the bank, and then the setup of audax as a software, platform company. None of which was conceptualized early on, and many people said that it was a very difficult journey or it cannot be done. And here we are.
I know that feeling, setting up a business, and also I run long distances and people always say, I cannot be done. But that's the motivation to actually go for it, right? You also state somewhere, I think online, that audax means courage. What does that mean?
So we had a long debate about this as we was thinking of spinning out the technology platform that we will provide to other banks. And internally as a team, we were talking about what do we call the new company. We had obviously a placeholder name, ABC Co. And we wanted to name the company, and we had a conversation, and many people were thinking about naming the company after what we do, right? Technology platform, open finance, financial services, whatever. Plenty of people having conversations around that. Then one day it struck me that maybe the best way to think about this as a new company gets set up, a business model gets established, and evolution will happen over the course of the next, 2 to 3 years or 5 years. Perhaps it's not best to name the company after what we do, because what we do 5 years from now may be different from what we do today. So perhaps it's best to name the company after the kind of people we want, right? And the kind of people we want are people who are bold, people who will take risks, people who will push the frontiers and boundaries of what is possible. And courage was a term that kept coming up in our discussions as what is the fundamental principle needed to push this company. And obviously then we said, courage as a word, as a principle, and the word audax obviously is French or Latin for audacity and courage. And that became our call sign, and we realized that there weren't that many players out there called audax, and therefore we used it.
Yeah, and I like that statement that it's all about people, because sometimes we feel it's about the right technology, and of course technology is important, but I talked to another founder yesterday who said exactly the same thing. It's about getting the right people, the smart people and highly motivated people, and brings me a bit to also the topic and theme of today, banking as a service that also enables, of course, the everyday person. But before we talk about the everyday person, can you maybe describe in your words, and maybe also in the context of audax, what banking as a service means?
Well, I think if you ask 20 people in financial services what the definition of banking as a service is, essentially you get 20 different definitions. I think that there is a long standing debate around this. So in my mind, the definition is quite simple. I think banking as a service is a distribution play, not just for banking products, but also banking capabilities such as onboarding a KYC, a customer, and fraud detection, and so on and so forth. And exposing these capabilities and products, loans, deposits, wealth, to non-financial institutions and getting them embedded into their ecosystems, right? So creating, say, a Grab bank. Well, GXS is in Singapore, but a Karo Bank or a Buka Tabungan, for example, in Indonesia, or any other player whereby you embed these financial services at the back of which is a licensed bank running the entire end-to-end process, but being completely invisible to these multiple ecosystems. Now, the interesting bit about the term banking as a service is that there are different ways of executing it, right? So in the US, there is a technology intermediary between the bank and the ecosystem on the front end, mostly unlicensed, significant risks of fraud and operational. In Europe, you get a slightly different spin on that, whereby you have a technology intermediary, but most of them are licensed. They're payments provider on some P2P licensing. Even then, there are some risks, but they are slightly better in terms of the way they ensure reconciliation of data as well as payment terms. In Asia, generally, you see a lot more where banks provide banking as a service directly with technology players embedded inside the bank, meaning people like audax, right? For example, create a platform and allows for bank to use that platform for scalability, instantaneous movements, modernization, no downtime, and allows for you to hit large ecosystems of hundreds of millions of players or users, and therefore run significant concurrent scale. We see that the third model tends to be a little bit more secure, given that the banks are behind it, and the licensing, the fraud regulations, compliance, everything is pretty BAU. And we also see that will start proliferating, I guess, across most of the Middle East and some parts of Europe, and some evolution of that model will reach some kind of a saturation point in terms of what that model looks like across the world, I think, over the course of the next 5 to 10 years. Bear in mind that that's one use case of a technical stack like ours.
And maybe in, for example, the Indonesia case, I read that it's about 150 million users, 20 million business users on the platform. So what was really the differentiating factor, the success factor that led to that you were able to pull this off in a market like Indonesia?
Well, technically, we didn't pull off the business, right? Standard Chartered did. Standard Chartered is my client. audax provided the platform, and we delivered it, the functionality into Standard Chartered's environment, and allowed for Standard Chartered to expose the connectors to their partners, in this case Bukalapak, and they have a few other partners in the pipeline. And I guess, reasonably speaking, most people want to embark on this journey or think about embarking on this journey because it creates a business model whereby your cost of acquisition is very, very low. Right, you plug into an existing ecosystem. Users are already there. Some ecosystems already have the data on the users, including KYC information. So it becomes a significantly seamless transition and a seamless process for both onboarding, underwriting, as well as provision of financial services products. So I think what really makes or break that kind of partnership is the alignment between the technology provider on the back end, the bank in the middle, and the ecosystem player on the front end, right? So there has to be some kind of a shared mindset in terms of cadence, in terms of development, in terms of release, in terms of security, in terms of compliance, that allows for the partnership to thrive. The technical bits of executing it, while complex, is not as important as a shared mindset behind the importance of not just speed and delivery, but also compliance and regulations. Yeah.
Brings me to the point of, as you say, customer acquisition scaling in a market like Indonesia, where there is also a bit of an unbanked or underbanked segment. We probably don't see it as much in Singapore or Hong Kong, but towards that democratization of finance and also even towards wealth, do you think that this model, and in particular then also with the partnership model that audax is in, that this can help to equalize economic inequalities to some extent?
Well, I think equalizing economic inequality is a far larger macroeconomic concern, right? What this does is provide access to financial services to potentially segments that generally struggle to get access to financial services. And in most cases, as we found out working with our client in Indonesia, is that a lot of segments in Indonesia don't have bank accounts because the nearest bank branch to them is a 10-kilometer walk away, right? So this allows for them to access these services via what they already have in their hand and what they already use on a daily basis, right? An e-commerce platform, for example. And I would say it democratizes access to financial services. Now, whether or not it actually contributes to the equalization of economic inequality is, I think, a much larger conversation around, structural inequality, access to education, access to mobility. So maybe in a very small way a contributor, but more importantly, at least it starts individuals on the journey to access financial products away from the private market, right? Away from the private market, away from the village tontins or the loan sharks, effectively.
Yeah.
Yeah.
Is that also something that really makes you happy and fulfilling if you see what you've achieved in such markets that people who have had limited access or even no access to accounts?
Well, personally, yes, there is obviously a sense of satisfaction, but I think we are only at the very beginning of this journey. With audax, my hope is to become the technical platform of choice, at least in the immediate term, for retail and SME segments for banks around the world. Now, how they use the platform in terms of enabling it for banking as a service as one use case, completely refurbishing their entire digital channel, recreating a standalone digital bank in a short space of time, or basically replacing their existing legacy platform for scale and speed, all of which are possible. It's super apps or open banking, for example, which we also support. Now, that is really up to the bank, who are our clients, to execute against in terms of democratizing access to financial services or any other of those use cases I talked about. Obviously, it's good to feel like we are contributing to it, but what I really want to contribute to is enabling banks around the world to focus on their core problem, which is that of managing risk, right? And not think too much about the ability to execute the flexibility around their systems, or whether or not they have to worry about downtimes if they make any changes. I want to take all of that away from our clients, the banks, and let them focus on managing risk and thinking about how they can reach more users around the world.
And comparing maybe the more mature markets towards the emerging markets like Indonesia compared to Singapore, sometimes, and we've seen it in China, that if you need to leapfrog, if you had so many rural areas where people had zero access to a branch or whatsoever, that pushed much harder towards really that innovation and these business models. And in other locations where it's a bit more mature, but there's a lot of legacy, there is less progress. How do you compare this? Do you see more openness to adoption of banking as a service models in these emerging markets versus the more mature? And how do you convince also the incumbent banks, very well-established banks that have a 100-year-old legacy application platform, maybe not as old as that, but very old, to make such moves?
Well, I actually think that the geography impacts the reason, somewhat, the reason why you would want to start thinking through a more scalable business model, such as banking as a service. But the real reason as to why banks think in that direction is because the reality is banks trade at on average 4 to 6 times book value, right? If you are an investor in a bank, the question you will ask is, why do I put money there when I can put capital in a tech company and trade at 10 to 15 times book value? And in order for banks to compete, what they really need to improve is their return on equity, and therefore increase trading at book value. The only way for them, and I'm doing this waterfall chart, right, whereby the only way for them to improve the return on equity is to either lower their cost of acquiring the balance sheet that they have, or sweating the balance sheet harder in terms of getting better margins on the balance sheet. And inevitably that leads to, how do I then acquire and serve at a much lower cost than I do today via branches and RMs, and at scale, therefore making sure that my gross margins on every single dollar on my balance sheet increases by 50%. And if that is the problem statement, then inevitably people will think about, okay, how do I scale and embed myself in some other ecosystem, acquire customers for next to nothing, service them completely digitally, which means your cost of servicing comes down by 70%, and that drives your return on equity conversation, which drives your book value conversation, which drives your investor conversation. So I think on the back of that, all banks around the world are thinking about it, mature or otherwise. In developing markets, you have a lot of banks that think about it in terms of not just the return on equity conversation, but also the opportunity to penetrate large untapped segments, right? Small tickets as they may be today, but they will be large tickets tomorrow, as most of these developing markets become largely middle-class markets over time. The large developed markets, banks in large developed markets, think of it as an opportunity to front-run and disrupt the dominant banks in those markets. Now, if you are a large dominant bank in a single market, you would be far less incentivized to go into a business model like this because there is a long conversation around cannibalization. But if you were a established bank, but you're not the dominant player, you're number 3, number 4, why wouldn't you? Because this is the one way, firstly, to increase your return on equity and also disrupt and penetrate markets that were served by the dominant bank for the last 15, 20 years. And that changes the dynamics, the market dynamics of, the road to dominance effectively. So I don't see the challenge of convincing banks around the world in terms of how they want to think about scale. The question generally, and this is almost universal, it's nothing to do with geography. It's how do we manage the risk around the business model? What is the true reputational risk that we take? Whose customers will they be if we partner with those ecosystems? I mean, a lot of it comes down to senior executives in banks, at least in my experience and in my opinion specifically, having a mindset of banking in 1995 to 2005, right, where ownership of the customer, bank branches, interactions are key, and a lot of them made their careers then, right? A lot of people who are management team of banks today were senior managers, middle management during the time period, and therefore brought that mindset up to the top. And for them, whilst to me these questions seem inane because it's clear how the thing works, the challenges around how they manage the risk, while a valid question, needs to be a lot more refined. And that's the real challenge of adopting this business model. Not so much geography, not so much opportunity, but how do you manage the risk?
Understood. But still, if I may ask, where do you see the hardest push right now? In which locations or geographies? Where do you see the biggest demand coming towards you? Actually,
the biggest demand based on our pipeline of conversations with banks is actually in Southeast Asia.
Yeah.
It's actually in Southeast Asia and some parts of Europe, depending on how you want to execute it. But mostly Southeast Asia and Europe, there has been a increased conversation around open banking, not so much banking as a service. So there are differences. Banking as a service is, like I said earlier, the innovation of distribution. Open banking is the innovation around securing customer data and allowing for customer to choose where their data is being used. So slight differences, lots of nuances, but different models. So a lot of open banking is being pushed through the GCC, but for embedded finance, banking as a service, we see a lot of momentum in Southeast Asia, particularly Indonesia, Vietnam, Thailand, having conversations. Obviously, the big mother of embedded finance is in China, where WeBank is everywhere. I think that is the largest embedded finance player in the world. And yeah, we'll see a lot more momentum coming in, I think, developed countries than developing countries. Because I think Africa will take some time to come up the curve, and in doing in their journey, they may develop a new business model that may not be banking as a service the way we know it today.
Yeah, Thailand is also a market to watch as they are about to announce the virtual banks in the next few months. Interestingly enough, I always feel that, again, the established markets like Hong Kong, Singapore, also Switzerland, Europe, when it comes to open banking, they want to be frontier. The government is giving guidelines, they are putting a sandbox out. But still, many of the big, large traditional banks are not yet adopting it as much. Why do you think this is the case?
Well, I mean, there is no real incentive to do it, right? I mean, there is. I can see the longer term incentive, but in the short term, we need to always remember, right? Most executives are compensated on the short term. So in the short term, not sure if there is. And even in the UK, the home of open banking, it's been what, 8, 9, 10 years, right? I mean, even today, 10 years from PSD1, PSD2, you have, a tepid adoption of open banking, really, right? Some payments initiation, some approvals, but it's still not as widespread as it should be. It has spawned a whole bunch of authenticators and intermediaries around in the region, like TrueLayer, for example, which is interesting. And I think it will take time. I mean, why would the bank want to share its data with someone else? It's the short-term thinking. The long-term thinking, if you were a mature bank, perhaps should be, yes, we have to share our data somewhere else. Yes, we have to let the customer enable their products from some other ecosystem. But what do we get in return? Is there an opportunity for us to acquire customers else, through these ecosystems? Is there an opportunity for us to create a far better relationship with the new generation of customers that are maturing in their 20s and 30s today? I'm not sure that's maybe there is a conversation around this. Obviously, I don't profess to know. But if you were thinking of the next 2 years or the next 3 years before retirement, that may not be the top of your mind.
Exactly, and I think it comes back to the earlier statement on having courage, right? Audax, courage if you're really only short-term looking and you want to rather be stable, and if you're a CEO of a large corporate, probably there's more things you can do wrong than things you can do well. So understand that. Maybe in the interest of time as we come close to the end, the last area I would love to tap on is a really forward-looking future. Maybe your own view, what gives you hope in terms of banking, financial services, looking into 5-10 years from now?
Okay. I think banking as a service, embedded finance, open banking, the various permutations of open access to data is the first baby step. I think the real bank of the future, if I were the CEO of a bank, of a significantly sized bank that it has multiple geographies, or even a single geography for that matter, I would think through the bank of the future for retail and SME. I mean, corporates is a very, very different game. Is this. The bank of the future would execute 3 different business models for retail and SME. You would have a fully digital bank of some sort, whereby everything is cost to serve is low. You create a relationship with your customer and use it for testing your own processes. You will have a full embedded finance play / banking as a service with multiple ecosystems, a ride-hailing partner, a air travel partner, a social media partner, Instagram or whatever, whereby you onboard millions of customers, serve millions of customers under somebody else's brand, but access their data on those platforms, right? And then you aggregate and reconcile that data on the back end together with your testing information on your digital bank. And the third model that you would have on the back of this is potentially a super app model, whereby you create your own ecosystems with participants from various other smaller players. You also have a housing rental platform, for example, and or a automobile purchase platform. So those 3 are your front ends. The back end then reconciles data from all 3 models. And then the bank of the future will include a new business line that creates and monetizes that data. Now, when banks think about monetizing data, they always think about cross-selling. They always think about what is your next best product? You take a deposit, now you should take a credit card, you take a mortgage, you take a cash loan or a trade loan or whatever. That's one part of monetization. The second part of monetization is if you have access to and reconciling that data on a real-time basis at scale and running analytical models with lots of agentic AI when it happens on the back end, you will be able to sell data. You will be able to sell data to FMCG companies who want to understand why their offtake has changed, as opposed to a dipstick test that they do today or a backward-looking test. You will be able to actually forecast it properly, right? You will be able to create advertising fee revenue because at the end of the day, the one place and the one source of truth is actually in the bank. Now, that for me, if I were the CEO of a bank, is something that I would build and I would work towards. It will take about 5 to 10 years to realize, right? So maybe not within the tenure of a single CEO, but certainly a very interesting business model. And if you go back up to the original point of return on equity, you are creating a massively 100% margin business with no risk-weighted assets against it. So I think that's a very interesting way of thinking about the future of banking and what the bank of the future will look like.
Definitely. Thank you so much for sharing. I'm looking forward to that future as well. And I know we partnered together, St. Paul's and audax, to make it happen. Closing the conversation, it was very fascinating. I'm sure we could talk for hours and maybe next time. Thank you, Kelvin Tan, once again, audax. I'm sure they find you on LinkedIn and other social media channels. You find also us on, of course, all the social media channels. Please like and subscribe. Thank you once again.
Thank you. It was a pleasure.